Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be discussing, I'm trying to add one more stock to my portfolio. I'm currently sitting at 18 stocks right now. I'm looking to increase my passive income dividend payout for the months of 1, 4, 7, and 10. So right now, January is my highest of those 1, 4, 7, or 10 at $103.57. I would like to increase my 4, 7, and 10 positions, the months, to pay out at least $100 or more. So I am looking for a good stock to buy that pays out in the month of October. So my method of buying stocks isn't buying what's on the news or buying what others are really talking about. I may need to fill like a specific niche at this point or month. At first, it didn't start off this way. I was looking at stocks that I was interested in. I was interested in Verizon, AT&T, Cisco, Costco, Lowe's. I have a variety of pharmaceuticals and technology and consumer stocks that I was really interested in, and those are the ones that I primarily bought. But now that I have my main ones sort of settled, I suppose, that I invest in monthly now, I would like to increase my passive income for the 1, 4, 7, and 10 months. So that's why I'm kind of going through and doing another sort of screening process myself. So my whole thing is what I look for in stocks or how I screen for stocks, of course, isn't going to seeking alpha or reading up on the news on what stocks are hot. I like to just go over to Dividend.com, search using the ex-dividend dates, and I'm looking for something in September. So that's what I punch in. September, mainly that's the ex-dividend date range, which means that their dividend payout, I missed a fly, whoops, is in October. So all I do here is I sort it by DARS rating, which is just Dividend.com rating system. Man, I'm not sure how they rate them. I'm sure it has something to do with the payout ratio, whether they have a qualified dividend, and how long they've had dividend growth and such. I'm sure they take quite a bit of stuff into their DARS rating system. So all I did here was write it here down in a notepad. MDT, I left it within this group of 3.9, 3.8 group, and then I did sort of like a little secondary group of stocks that are 3.6, 3.5 and below into 3.4 group, and you can see that there's many stocks in here. So I have a variety of stocks to kind of screen. So now I have stocks in mind, a list of stocks that are investable. Now it's my job to sort of screen them. So I do kind of like a soft screening at the beginning. I'm looking at a good value entry point. So at this next point, I'll go ahead and type all their tickers into here, and I'll kind of start off by quickly looking at it. What's its price, what's its yield. Its yield is currently sitting below the average yield, which is around average yield is actually right around 2.6, 2.7 would be average. You can see the highest was around 2.17. So it's not optimal at this time. It's not a really volatile stock either. It's only this 52-week low is about $52. 52-week high is around $51. So not too volatile. $10 difference or so there. So pretty good, maybe long-term buy and hold, but at this time, the price greatly outweighs its current yield. So I'm looking to buy where a stock has a much higher yield than its current price. So you can see this one's trending down and has been for the last year. It's been just on a downwards trend. Looks like it finally hit its support here. We can see that in the 3-year mark here. Well, its support for $73 was probably, it could continue to fall into the $66 range. That could be its support area right there. Who knows what's really going on with this company, but this is a soft screen. So all I do is look at its 1 and 3-year, see that its current yield is higher than its current price per share, and then I give it a star, meaning that I'll kind of look into it a little bit further. That doesn't mean I'm going to be buying it or anything. It's just a soft screen to see whether it is worth looking into more, why it's on its way down, what sort of news or what's really affecting it, what the CEO has in mind during its quarterly earning reports. So that's what I do. I go through here and I'll check a stock, and okay, this one's too high, price is too high compared to its yield. EIX, it has no more dividend, it stopped paying out, I suppose, or something here. NDT, it's currently average. Its yield is right now currently over its price, but at the same time, there might be other stocks out there that are better investments, So I kind of go through here. MO, look at this yield, it's nearly 4%, whereas the last time you would see this stock with nearly a 4% would be back in early, looks like late 2015. It was right around this 4% yield, whereas now it's kind of maybe on a downwards trend. So again, you'd have to look into what's on the news affecting the stock as to why it's dropping this far, and it could be a support of around this price right here. So this could bottom out here and then pick back up, as what stocks do. So this would be one that you'd have to look. That's why I gave it a check as well, to look into it a little bit further. So now I'm going to go ahead and continue on doing this here in the future, but I'm kind of just videoing sort of like my soft screen process. Getting whether a stock is currently undervalued compared to its price. And then the next portion I would kind of do is check out what its payout ratio is, what its dividend growth is. You can see that this one has a payout ratio of 43%, dividend growth of 7 years. So it hasn't really paid out through a recession, or it may have cut back or continued paying out the same. So it didn't have any growth during a recession. Its dividend payout, or its ex-dividend dates in 3 days. So if I were to buy into the stock, say a couple shares, I would get paid 55 cents per share per quarter. So if I could buy like 2 shares, I'd get paid a little bit over $1, like $1.10 for the 2 shares. Or in a year, I'd get paid $4.40 for those 2 shares. You get payday of 10.10. So it's really not a bad yield. 3.01 is really not a bad yield right now. Let's see, 5% annual growth. I like to have around 5 to 8% or higher. It doesn't have some of the other information as far as history goes. We'll see here. I'll show you here in just a second here. It's MDT. Is a stock that actually does have some decent information. This one has dividend growth for over 35 years, so 39 years of dividend growth. Its payout ratio is only 38%. It has a higher or lower yield right now, but so this one's in ex-dividends in 10 days. It would pay out on October 20th, and it has annual growth of for 2016 for 14.6%, annualized growth for the last 3 years, 24.2%, consecutive years of increase, 39 years, so very nice growth. So just taking a look at that number, where is that number? 14.6. If you use the rule of 72 here, and see here, if you just did 72 by what, 14? Why doesn't it open here? Okay, 72 by 14.6. You could see your initial investment, say you put, say 5 years. We'll say 5 years. So if you put $100 into the stock, you get $2.24 back per year. If you put $1,000, you would get $22.40 per year. If you put $10,000, you would get $224 back per year for that $10,000 investment. So essentially in 5 years, if they kept up that dividend growth at 14.6%, in 5 years, your initial payout of $10,000, or say $1,000, $22 in a year would double to $44 in a year, and you would even have to have invested any more in in that company. Now, if you had invested what they paid out to you and you had like drip enabled, that would compound, and that would be much more than $44. You'd probably be making $60 at that time within the 5-year time frame, just from your initial investment plus from the drip, the dividend reinvestment program. So you would easily double your payout within 5 years by buying into the stock. So that's I gave this one, I had plus on it to look into it a little bit more. This one could be a good long-term buy and hold because that payout ratio is really nice. They can continue to have that dividend growth and raise that yield for time for the years to come. And they have solid dividend growth. Sorry about my sniffles. I'm going through some allergies here in Germany. And down here in the bottom is where I was looking at the graph for the other one. The other one didn't have this. You can see that they used to be paid 8 cents, 11, 13, 19, 20, 23, 26. It just has nice, steady, that jump right here in between 2015 to 2000. Oh, okay. So it was in 2015 they jumped from 30 cents per share to 38 cents per share per quarter. So very nice growth there. So this could be one to buy and hold. Looks like they just increased their dividend payout to 46 cents. So if you bought into this now, you could see your dividend yield and your dividend payout being increased next year as well, and that would compound your yield in your payout. So this is one I would definitely look into for the month of October. This looks really nice. Medical appliances and equipment. I'd look into it further as far as how much did it drop during the past recessions? How well did it recover? What's this recovery time? Who's the CEO? Listen to the earnings report and see what they have to say for the company. What's in its future, and kind of go on from there. So as far as that goes, that's what I kind of do. I go through a huge list of stocks. I'm probably going to write some more down and just kind of go through there. This one is a good one as far as screens so far. Soft screening had passed the current yield right now. Let's see, it was MDT. The current yield is slightly outweighing the price right now, so it fell down a little bit, but it's bouncing back. This could recover and continue on its upwards trend. So I could get a good buy-in entry point at 2.13, and then it could definitely increase. Now, the best buy-in entry point would have been around 2.36, where it fell down to $71, but not a bad buy-in entry point. So again, I am going to continue going through my list, and I stopped at KBM, but I'm going to go ahead and continue on and screen the remaining of these, soft screening, and then go and look at their dividend, their payout ratio, their dividend growth, their annual growth, how many years they've had, and just all of their history. And at the bottom here, it has really good information. If you're ever looking at stocks on this page, it gives you their company website, their investor relations website, their wiki pages, and their SEC filings. So all in all, really good information to pull off Dividend.com. Being a dividend investor myself, that is what I am looking for. So that is it for this video. If you have enjoyed this type of video, I am looking to increase my positions in 1, 4, 7, and 10. So I am looking for a stock that's not being talked about right now. I've never heard of Medtronic before in the past, and it looks like a good entry point right now. But at the same time, I'm not done screening. So you could see in my stocks I bought in September, what stock I actually bought here in September. And that'll be coming up in the future. So that is it for this video. Thanks for tuning in. If you have any questions, go ahead and leave that in the comments below. If you have any, if you like the video, go ahead and hit the like button. And I will see you guys next time. Have a good day, and bye-bye.